Copy URL.
The language is going to turn blue on here, I'm telling you guys.
Oh God, I really have to be careful, don't I? Paste. Right, I think posted that in the group. Right, I think I'm live in that, so then I need to just go live in the other group, don't I? God, you have to do this every time, Paul. This is a
I know. This is why I'm always like a minute or two late. I seem to start earlier every time and always end up too late.
Right, okay. Bear with.
See, you guys that come on, you think this is easy.
God. Copy.
I just make it look easy.
Right, I'm going to paste in there. Wait for the preview. Oh, Jesus, there's actually people on here now. That's scary, isn't it? Okay.
While you're getting set up, Sarah, can you answer something today on this for people, please?
Oh, God, yeah.
Moving average convergence divergence. Can you explain its origins?
It's on my list. Don't you worry.
Okay, cool. If you get to it, that'd be great.
Right, okay. I think now I'm where I'm supposed to be online, so I think we can crack on. Hello, everybody. How are you? Right, hang on. Let me just have a look at my gallery view because I want to see all your faces. Make sure you got your cup of tea. You got your tea? What's in it? Tea. Yeah, well done, Leslie. Well done, Richard. Excellent. Right, okay. Oh God, everyone's jumping on. Shall I give them all a minute? Do you reckon? Have a sip of tea. Right.
You'll still get people come on like 5-10 minutes from now. So
get on with it.
Kind of tell them stuff, but not maybe the most essential stuff.
So basically, Paul's saying, "Get on with it." Right. Okay. I've only got how long is Avengers Endgame on for? Because I've got that long. That's what I just put the kids in front of. So, right. I better share a screen, I suppose. Right. Which screen do you want? So many options. Share. Oh God. There's the ninjas. Right. Let's go to. Let's just put something else on the screen rather than. Now, hang on a second, because that's up there now and it's in my way. Let's go to this first. It's important. Okay, Forex trading. Forex. I don't know about you guys out there, but when I first was introduced to Forex all those many years ago, being 3 years ago now, I had no idea what it was. I didn't have a clue what any of it was talking about. I just thought it was some federal courier company, and I just thought, oh, what's going on? So Paul Turner showed it to me, and I thought, oh my God, I don't know anything about maths. How the hell am I supposed to trade Forex? But I did listen to Paul, which doesn't happen very often, and I did have a look at it. And what I learned was that anybody can do this if you are ready to dedicate the time and effort it takes into learning it. This is not just a get rich quick scheme. This is a skill that you need to learn. And what I learned was that anybody can learn this skill if they're prepared to put some time and effort into it. Now, you will go on a roller coaster ride with it. Don't expect to just, look at it the first time and understand it, because it's going to take you a few months to really get your head around it. It took me a few months to really get my head around it. And the only way that really you can get your head around Forex trading is to actually physically just do it. You can watch a million videos, you can watch a million trainings, but until you actually sit there on the charts and take a few trades, that is probably the best way that you will learn how to trade. So this is why one of the reasons we've set up these live trading sessions, because I think it's really important to be able to physically watch somebody go onto a chart and trade, because, and I need a sip of tea. Oh, it's all getting a bit much.
Sarah.
Sarah,
it's Kevin. Just quickly, are you recording?
I don't know. Am I? No, probably not. Do I need to? If I'm live streaming, do I need to?
It's just a matter for you, because sometimes just jerking your memory, I sometimes forget. It's about whether you want to or not.
You don't need to, Sarah. If it streams into the group, you don't need to.
Well, that's what I thought. I thought then they can go and watch the stream, can't they?
Right.
Unless you want to record it, and then you could put it on YouTube.
I won't, because my my computer's maxed out on space, and it'll be about an hour, won't it? I'll see how it goes. If I feel that I'm going to record them, I'll do that in the future. So, but if otherwise, hopefully the live streams will be enough. So we'll see. We'll just, I mean, you know, this is the first time, so I'll just see how it goes. If I think I want to record them and whack them on YouTube, then I'll do that. But yes, no, I wasn't, Kevin, so I forgot about that bit, but thank you. Right, okay. So yes, Forex, the best way to learn is to do it. Now, we recommend everybody starts on a demo account, because that way you can still place trades, you can still learn how to buy, how to sell, but you're not risking your own money, but you are using money, so it kind of gets your head in the right space as it was. Now, we use a very, very simple trading strategy, and it's called the BYOB. Now, the reason that we use that strategy, all that weird noise, let me just have a look. Oh, I can mute people, can't I? I've got the power. This is so cool. I don't know how you mute it. Oh, mute Veronica. Oh no, we'll sort it out. Right. So, right, trading. I've lost my flow because somebody's driving me. Right, it doesn't take much, does it? Right, the basics. We are going through the basics today because I know that there's a lot of brilliant live traders out there that are really into it and they are kind of doing their own thing. And I think sometimes, you know, we need to just literally pull it right back to basics and just start from somebody that is literally just completely come into it and like, well, what do I do? How do I look at this? So what is Forex basically? It's the buying and selling of foreign currency. Do I need to put my stop sharing? Is that a bit boring? Looking at that? Just change it. Let me talk to you. Right, okay. So it is the buying and selling of foreign currencies. And basically what we do is we profit in the markets when the price goes up or when it goes down. So it doesn't matter. People are saying to me at the moment, oh, with all the craziness that's going on in the world, is this a really bad time to start? Well, the answer is no, because we can make money as prices go down as well as go up. So it's just all about learning where it's going to go, what it's going to do, and making the most of that in a very safe and easy way. So we measure, oh, screen gone funny. We measure profits in something called pips. Now, lots of people get very confused with this, and let me just explain it in a very simple way. If everybody around the world is trading exactly the same currency pairs, we can't literally say, oh, I'm trading the US dollar, I'm trading the euro, I'm trading the Japanese yen, because people have all got different currencies around the world. So what Forex do is make their own type of little currency up called a pip, so that anybody around the world, no matter what currency they particularly are using, they all can earn a pip. And a pip can be in Great British pounds, in US dollars. It's like a little kind of currency that the Forex markets use that is completely universal. So we talk in pips. So if I say I've made 10 pips today, that could be $10, it could be 10 Japanese yen, it could be 10 US dollars. But pips is what the Forex traders all understand. So they know what a pip is. They know that whatever currency they're trading in, if they've got a pip, they know what it is. So it's really, really an easy way to use it. So if you hear the term pips, that's what it is. It's called point in percentage, but pips for short. Now, a pip can be worth whatever you put your lot size to. Now, your lot size that you set your trading account to depends on the size of your account. You need to make sure that you use something called a pip calculator, or you go through the basic training in IM Academy and learn how to work out your lot size. Do not trade with a lot size that is too big for your account size, because you will blow your account. It'll be too much money. You need to really start off very, very basic. So, talking of the incredible IM Academy, right, so in IM Centre, which you will all have access to once you're customers, there is an incredible training. Right, now if this got to log in. Right, so if you go to your IM Centre and go to Academies, can everyone see my screen all right? Am I sharing the right screens and things? Is that all okay? Because I don't want to be talking if you're not seeing me.
No, we can see you.
Yeah. All pictures, all photos.
No, you can see all of us. I'd rather look at the screen.
Yeah. Right, okay, so I need to share screen, don't I?
Do you want to, before you do that, do you want to mute a few more people out?
I say Adam needs muting.
See.
Mute everybody
Right,
on
got it.
fire.
Yeah.
Who else can I mute? Let's have a look.
Just
Right.
click on participants and just click on mute all.
Oh, can I? Fantastic. Mute. Oh, top tip. Continue. Right, thank you for that. That's brilliant. Right, share screen. Share screen. Share screen. Right, okay. Did you just look at my messy desktop then? Oh, how embarrassing is that? Right, okay. Are you seeing the I Am Academy screen now?
Yes.
Yes. So I'm winning. Right, okay. In your I Am Academy, in your I Am Centre, you have access to the world-class I Am Trading Academy. Please do not ignore this academy. This is the best thing you are paying for. This is your education. Do not rely on live trading to teach you how to trade Forex. Do not rely on YouTube to teach you how to trade Forex. This is how you trade Forex. You go to I Am Academy in your back office and you work your way through the I Am Academy and the videos and everything else. It's in every language. There's no excuses whatsoever. And you literally go to getting started and you work your way through your basics, okay? Because there's no point in jumping on a live trading if you've got no idea about anything. You really do need to just go through your basics. So what is a pip? What is a lot size? What is buy? What is sell? What does a chart look like? And then you at least have a basic understanding of what you are looking at when people start talking to you on these live sessions. Otherwise, you're going to sit there like a rabbit in the headlights. You're not going to have a clue what's going on. And you're going to get worried and stressed and thinking, I can't do this. But the academy is excellent and it talks you through everything step by step in small little bite-sized chunks and videos. So anybody that joins, please spend a couple of hours and go through your basics first. And then that way you will have lovely fresh eyes when you're coming onto our live sessions in order to trade along with us. So it'll also tell you to set up a trading broker account, which you will need a broker for, because it doesn't come out of your bank account. You set up a broker account and the broker is the one that talks to the traders, talks to you, and they're kind of the middleman, and they're all safe and regulated. So please just look up a really good one. I am with IC Markets, there's FX Choice, there's loads of really good ones out there. Make sure you choose wisely, but all of that training is in your I Am a Centre, and also in the Ninja group. When you go to your Ninja group, there is a getting started section. If my computer wakes up, I think it's in the units. Oh, hang on, keep sending me funny things. Right, look, start here. Right, please go to your Ninja Forex Traders group, which you'll be added to when you're a member, and you can literally go through some rules. If you're feeling overwhelmed, which broker do we recommend, what leverage, what account type. So everything you need is in your I Am Centre and also in your welcome getting started with your Forex traders. Right, okay, so let's have a look. What do you need to trade? You need a broker. You need a demo account to start. You can set up a normal account with that same broker when you're ready to do so. People always say, how much money do I need to trade? You can start with $100 depending on your broker. Some people start with 1,000. It just depends on what you have, what you prepared to start with. You can start with as little as 100 and just build and compound that money. There is no reason why you can't be completely successful and highly profitable with starting with $100 in your trading account. So please don't think that you need lots and lots of money to start, because you don't. Okay, so once you have your broker, you have your demo account, you need to set up MT4. MT4 is something that it's a phone app. It's a phone app, which is awesome. So you can trade off your phone, and also it's a desktop app as well, so you can put it on your PC, but you can't run it, well, you can run it on a Mac. And there is a thing in the unit section of how to get it onto your Mac if you want to do that. But I've just bought myself a cheap laptop and I just run it on there. And that is kind of your trading account. That's how you trade. So basically, I do it all off my phone. It's an app. Let me just stop share for a second. It's a phone app, which, oh, I don't even know if you can see this. I don't know what you can see. Right, it's a phone app, right? I don't even know where I've gone. I've disappeared off the screen. There I am. Right, it's a phone app which you can download in your app store, and literally you click on your phone app and it comes up with all the currency pairs, and then literally what you do is when you're going to place a trade, you select the currency pair that you're going to trade. So let's go for the Great British Pound, shall we? Euro Great British Pound. It gives you a little chart on there as well, and then when you press trade, you can trade from your phone, and it's all very exciting and very good. And you can do all that from your laptops and things as well, but that's all explained in the training, so don't panic about that. Right, so I suppose you want to learn how to trade now. I suppose you want to have a look at some charts, do we? Right, we better do that, I suppose, or you're going to get really bored of me whittering on. Right, okay. Oh God. Right, share screen again. Let's attempt this again, shall we? Share. Right, so you should all see my screen now. Right, okay. This, oh, let me get rid of all these things or I'm just going to confuse you all. Let's get rid of all this stuff. Go, 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 go. I want to get naked with you now, guys. I hope you're ready for this. We're going to get naked on this chart. So be prepared. Okay, right. I'm going to literally, oh God, go away. Right, that's it. I'm going to get
Sarah, can you definitely record this one then?
No, definitely not, because my husband see it. Right, okay. Let's get rid of that. Let's get rid of that. Right. You can open up a completely free account with a company called TradingView, tradingview.com. And they provide excellent charts for you to analyze off of and draw on and all that sort of stuff. And they are really, really good. IM Academy do use TradingView when they do their charts as well, and when they use their vibrator tools, they are all using TradingView. But I find it personally quite hard to draw on IM Academy systems because they've got all their things going on. So you can literally come and get naked on this chart and literally just open up your chart, and this is what one looks like with nothing on it. Okay, let me just get rid of some drawings, remove drawings. So there's nothing on this chart at all. This is just candles and pairs like you will see on any naked chart. Now, candles. These are candles. Red and green lines on this page are called candles. Let me just go back to normal candles. Right. A green candle is a bear, not a bear, a bull, or a buying candle. The way you remember, candles are called bears and bulls, which is just confusing. And it took me ages to remember which one was which. Now, I think I've got it sussed. Right, a bull starts with a BU for buy, right? So it's a bull, it goes up, right? Sell is SE, so SE sell, and bear, BE bear goes down, right? It's really bizarre, but that's how I remember it. I remember bull as BU buy, so bull candle is up and it's a buy, and a red candle is down and it's a sell. So looking at this chart, this is the Euro CAD, so the euro against the Canadian dollar. Now, as you can see, at the moment, the last candle that you see on a chart is what's currently going on in the markets, right? And this candle is selling. Look, see, it's a red sell candle and it's pushing down. So the euro is pushing down against the Canadian dollar, as you can see, all right? So what you would do on this instance is you would want to sell, you know, that candle. But we can't just go in and sell off of a naked chart. We need some things on it, right? So we teach a very, very basic strategy called the BYOB. Now, I'm not going to give you a big tutorial about how to use TradingView. There are videos out there how to do this, and you also be learning this in your IM Center as well. But what I'm going to do is show you what you'll be using to trade from. So this is your chart, okay? So what you then need to do is you need to sign up for a product within IM Academy, because you know, none of us claim to be expert traders. None of us claim to be professional traders. We just know how to trade based on the education that we have received from IM Academy. So what we do is we rely on tools from IM Academy to give us trade signals to go and look at. These trade signals have come from highly experienced traders and also incredibly advanced systems that look at the markets, they scan the markets, they know where these prices are going and what's going on. So you can go to your IM Academy products. Now, with your basic package, you get the harmonic scanner, which is an incredible tool. Let me just open that. Oh, will it open? We will see. Of course it won't. Oh, yeah, it's spinning. I'm surprised this is working actually, because I've got so many tabs open. I'm like Brian Knight at the moment. I've got like every tab open possible. It's going to go. It could crash at any time. So let's look at your freebie first, your harmonic scanner. This scanner is an incredible piece of kit, and million-dollar traders use this scanner. This scanner scans the Forex markets for trades, and it looks for patterns in the market. Now, when you trade, patterns form within these candles. These candles that I showed you before actually form patterns within their, the way that they form over hours, over, days, over weeks. They form patterns. And these patterns have got really unusual names like bats, crabs, gartleys, butterflies, sharks. And all of these patterns are then picked up by this machine, and they can tell you what's going to happen. So for an example, I've literally just opened up the scanner, and what it's telling me is that on the hour chart, look at the USD against the Canadian dollar. Now, what it's done is it's found this pattern within the market. And what it does is it draws this yellow triangle formation, and it's always got an A, C, D, X. Now, D is where the price currently is. And what it does is it actually gives you where you should get into a trade. It gives you entry points. It gives you where you should take your profits. And also it will give you, if I scan it a little bit, a stop loss. It should do. There we go. Stop loss. Now, a stop loss is where they say if this price goes down that far, it's a failed scan and it hasn't gone the way that they expected it to. So you put that stop loss in to stop the price dropping below what you expect it to go, because you don't want to lose too much. So you can control your stop loss. You can put whatever stop loss you like in, but they do give you a recommended stop loss. So this scan here is telling you that they think that this candle here is going to turn. At the moment, it's in a sell formation. As you can see, it's going down. They are saying that this is going to turn and this is going to become a buy. So they are recommending, it's just an idea, that you can buy the US dollar against the Canadian dollar and ride this up to where it's got take profit 1, 2, and 3. Okay, so we're expecting the next candle to form to be a blue one, because blue is, remember, or blues or greens are your bulls for buy, right? So what you would do is you would look at this and go, right, okay, that's fantastic. And then what you do is you use the education that you've got to make your own analysis of this and decide whether you want to get into this for a buy or not. Now you can measure how many pips this could be. There's a little ruler at the side. And if you click where the D point is, drag this up to where they think, say, that take profit one would be, it says in that little blue box 1873. Now you remove the last digit, so that they think that that is going to be 187 pip move to take profit one, which is incredibly exciting. So this is just a little overview of the harmonic scanner. As you can see, as you flick through the pairs, it's giving you one here, a euro, Great British pound to have a look at. They think this is going to be a buy. The scanner is telling us that this one here, the NZD USD, is going to be a sell. You can take it down there. So as you can see, this scanner is very powerful. Now, this is one that was called a little while ago. They called it here for a buy. Look, it did. It went up. It hit take profit one, which most people just get out of take profit one. They're more than happy to do that. It had a little bit of a retrace, but it did go up to take profit two. It's having another little bit of a retrace, and there's no reason why that won't go up to take profit three. So anybody that got into that one could have got potentially 500 odd pips. So not bad, eh? So this scanner is absolutely incredible. It's really good, and you can look at it on a 15-minute, on an hour chart, on a 4-hour chart or on a day chart. So it depends on what sort of trader you become, whether you like to go into a market very quickly, get your 10 pips or something and get out quickly, then that's a scalp trader. That's something that you can do on here on the 15-minute chart. If you are more of a, you know, you go in the morning, you have a little look and you think, oh, that one's setting up nicely for the day, then you could possibly be a day trader. So you'd want to be trading off the hour and the 4-hour charts. If you're a swing trader, sounds very exotic and exciting, but actually what it means is you hold trades for quite a long time, over weeks. Some people hold trades over months, and then you can start to analyze that off of a daily chart. So each one of these candles will represent a day, a movement in a day. Okay, whereas on a 15-minute chart, each one of these candles would represent a 15-minute. It's not even showing up, is it? On a 15-minute, each one of these candles is what's happened in the last 15 minutes. So that's what's happened in the last 15 minutes. If you went to an hour, this is what's happened in an hour. So you can literally, you can decide what sort of trader you want to be, and you can go in and you can change that. Right, okay, but I wasn't here to talk about scan up. Let's get rid of that. I want to talk to you about the vibrator. What a cool name, not. Right, okay, the vibrator. It used to be called the web analyzer. Still is the web analyzer. They are in the process of changing from the web analyzer to the vibrator. It's the same tool, but the vibrator has kind of been pimped up a little bit, and it's kind of got latest technology. It's kind of got all this kind of AI technology in it. It's really, really good. But to be honest with you, I do prefer the old one, and you can access both of them still, which is really, really good. Now, did I have it open? Yeah. This is the web analyzer. Web analyzer stroke vibrator. Okay, so you can find these in your IM center as well. You can add these on. This is a little add-on to your basic package. I think it's less than $20, I think, as an add-on. So it's definitely worth the money. But I want to teach you a really, really basic strategy called the BYOB. And the best way to teach BYOB is off of this vibrator tool. Now, the vibrator is also a very clever little instrument that scans the markets for sudden movements, sudden, what's it called? What's it called? What's it look for?
Volume bursts.
Thank you. Volume bursts. Yes, it looks for volume bursts, which means something is about to happen with a particular pair. Right? Okay, so it's gonna warn you about something exciting. Now, I'm going to teach you about the BYOB strategy. And this is one thing I'm just going to concentrate on these sessions. It's literally going to be, we're going to come on to a naked chart. We're going to set it up. We're going to look at some BYOB strategies, because it really is very, very simple to do. It's literally 3 things you need to remember. Anyone could do this if you just practice, and it's really easy. And also what's great about this strategy is that you can do it whether you're a quick scalper, or whether you're a day trader, or whether you're a longer term trader, because you can change the time frames. So it works incredibly well for everybody. So BYOB. Now, this vibrator tool, as you can see down the side here, it's calling out trades all the time, right? All the time. I mean, look, these are coming in like every 15 minutes or so. And that one, that this is the time they come in. There was like 3 or 4 in one go there. So you can never say there are not enough trades to take, right? So let's have a little look, shall we? You've still got your candle formations on here. Now, the BYOB does require you to put some things onto your chart. So this is when we go from naked to getting dressed, okay? We're about to put some things on, so I'm sorry about that, but we need to do that. Right. So when you come onto here, you will be asked to put a strategy at the bottom here. Okay, when you first log onto this for the first time, it'll ask you to add a strategy. So we are adding the BYOB cash out, because that is the strategy that we are using. You simply click on your strategy. It will ask you to choose one. There's loads, look, there's loads. So there's something for everybody, but we're going to concentrate on this one today. The BYOB cash out, okay, that's the one we're going to use. And you can set your cha-chings on and off on this one, or dark mode on and off. You can have your chart colors, whatever color you want. So when you kind of look at other people's trading charts and you think, well, that looks completely different, you can just change the colors. It really is. You can just literally just go in and put this to whatever suits your eyes. because sometimes I look at people's charts and I think I can't see those candles because of the colors they've chosen, but that might work for them. They might have some weird sort of weird eye thing going on. But for me, I like dark charts, but some people like the white charts. But that's personal preference. That's just something really easy you can change yourself. Right. So BYOB. Now, we are just, I say we, I mean me, I concentrate on the 5 minute and the 15 minute because I like to scalp trade, which means I like to go in, grab a few pips, get out and get on with my day, right? I set myself a target of only 10 pips a day. 10 pips a day will set you financially free if you know how to get 10 pips a day. You just need to learn how to get 10 pips, which is really, really simple to do. So, not easy, simple, right? Easy bit is the psychological bit, right? It's not easy because psychologically you find it very hard, but you'll get that as you go through your demo accounts and you start trading, because we're human beings at the end of the day and we're greedy buggers. Right, okay. Let's come up. Right, Euro JPY. So let's look at one pair, shall we? You click on it because it's giving you a little alert that something's going to happen, right? Now, let me just move you lot up over there. Still see you. There you go. Right. When was this called? Right, as you can see on this chart down the bottom, see this? These are times. So you can see when this was called. You set your time up to what time you are currently in. So in Great Britain right now, it is 15:34 in the afternoon. So I have my chart set to that. Okay, so it works for that. Right, now this trade was called, time called, it was called at 3:30. You can see that up there, 15:30, right? So let's see, it was called at 3:30. It's called, yeah, right, we're right on the ball there, look, there we go. This is saying that something is happening, okay, on the 15 minutes with the Euro JPY. Now, this is where the ninja sauce comes in. This is where, you know, this tool is awesome because it's telling you something's going to happen. But we don't want to look at that, do we? We want to look at something else. We want to look at our own BYOB ninja styly. So this is what you do. You come back to your trading view, your free naked chart, right? Okay, your free naked chart. And that pair was the Euro JPY. So down the side here, see, Euro JPY. Click on that. Move you back over there. Corona. Right. So, Euro JPY. Oh, got things popping up everywhere. This is the Euro JPY. Now, what we want to do, we've still got drawing tool on this. Remove drawings. Okay, we need to add some things to this for our BYOB strategy. You will be given a checklist in the Ninja team, which you can use. And this goes through, it tells you what you need to do. Right, the first thing we need to do, we need to add some things to this to help us make a good decision on this trade. Because I'm talking, I probably missed it, look, it's moving like wildfire. Right, okay. So we need to add some SARs, PSARs they're called. Now, PSARs are your stop and reverse indicators. PSARs. Just looking at my notes, hang on. There we go, there they are. I've got my notes written down here. Parabolic SARs, right. These are little dots you can put on your chart. Now, to find them, you go up here to indicators. Now, you can just type in PSAR in your search bar and find them that way. PSAR. Okay, and there's loads of PSARs in here. You just want the basic one. So I've already got it in my favorites. Let me just go down. Parabolic SAR, there it is. Parabolic SAR. You want to add that to your chart. Now you can see on my naked chart, I have these little dots, these little lines. Look how beautiful are these, look, see? Now, what these do is they sit underneath when a trade is going up and they sit on top when a trade is going down. And these little SARs, they tell you when a trade is going to change direction or it's going to change the trend of your candles. So as you can see at the moment, they're underneath, but look, that's getting very close to that one there. Very close. Right. So the next thing we want to add on, actually, I bet to do let me just go to P-stars a minute. When you've dropped it on your chart, you get this little thing here, and you see this little cog. You click on that, you can change your inputs, but we want this at 002, 002, 02, which is your default, so you don't have to change anything. Just leave that on there. Right, so we've put our P-stars on. Right, and the next thing we want to add to this is something called the stochastic. So we go up here again, see what this got FX up here. This is your indicators. You want to type stochastic in there. There it is, stochastic. Now look at this, we've got a pretty little purple wavy line on here now. This is very exciting, isn't it? Now, this tells you when a currency pair is oversold or is overbought or something like that. What is it? Overbought or oversold. We'll get this right. Now, this purple zone here, okay, if these lines go outside of your purple zone, this trade is overbought. It's up here. It's too high. It's above 80. It's too high. If it drops down below this purple line, it's below 20. It's too low. It wants to go up. Now, if you can see, when it was down here and it was right down here below the 20, look what happens. It was too low. It needs to go up. And look what happened to the chart. It went up. See? Now look, it's up here. It's too high. It wants to come down. Look what's happening. Coming down, right? So this indicator gives you a really, really good indication, hence the name, that there is something happening. Look, it's too low. You want it to come up. It came up. Okay, so at the moment, it's staying down. So you want to be looking at this to see whether you think that this is oversold or overbought, because you want to make sure that you're getting in at the right time. Now, as you can see, there is a blue and a red line on this one. Right, if the blue is above the red line on this, okay, the buyers are in control. So the buyers are taking this up. Look, they're in control. They crossed here. They're in control. They're taking control, and they've taken this trade up here. Look, they're in control, all the way up here. But look what's happened here. It's crossed. Can you see how that blue line and that red line have crossed over? The sellers are taking it back. They're like, no, sod you. I'm coming over here. I'm taking this back. They've crossed right here, and they're now in control, right? The red is on top of the blue. The sellers have taken control, and look, they've taken control in a big way, because not only has this crossed and it's over the 80, look, we've had this little SAR, see this little dot that was under, it's just flipped on the top, which means that it's going to start to push that bugger down, right? So that is going to start to come down, right? Now, the other thing to make this strategy, so you've got two things already for this strategy that's making you think, well, this is, you know, I can understand whether that's up there or whether that's down there. I can understand if that dot's under there or up there, right? This is nothing major at the moment. This is nothing that's going to blow your mind too much at the moment, right? I'm sure all of you can do that, right? So, right, number 3, you can change the way that your candles look. Now, these are just standard candles, but we want ninja candles. We want Hakanashi candles, right? So you click on here. There, see, it's come up as Hakanashi candles, right? These are Japanese candles, and these candles are kind of an indicator within themselves. These indicate trends. These candles show you the basic trend of that particular candle, right? So what we want to do is we want to look at these. Now, I'll tell you something for certain, right? A nice strong candle that we can trade off is got a big body. See this bit here is the body. See this really skinny little line sticking out the top? That's called a wick, right? Do you know what wicks are? Wicks are bad. Wicks means that this candle doesn't know what to do. Look at this one. Look, you've got a little body and you've got wicks either side of it. This candle is indecisive. It doesn't know whether it wants to be a buy candle or whether it wants to be a sell candle. So we would be very cautious on a wiki candle. It's like Paul says, wiki, wiki, west. Is it wild, wild, wiki, wiki, west? We don't like them, right? We don't like those sorts of candles. We like nice, strong candles, because a strong candle is a good indication that this trade is behaving itself. Wicks are bad. Wicks is a naughty candle, right? We don't want wicky candles, right? So there are basically the three things that we need to look for. So we now know that we're looking at these little dots called PSARs. We're looking at a stochastic chart, and we're looking at candles on a Heikin-Ashi. Three things, right? This is what we need. So you're saying now, that's fine, but how do we trade? What do we need to do now? Right. So as I've told you before, you come to your IM Academy tool, vibrator. Where's it gone? Oh God, like Brian Knight, Mrs. Tabs here. Where's it gone? Right one, that one. Web analyzer. There we go. Right, as you see, this has changed already. Look, that's well away. That's gone. Got to be quick. Got to be quick. Right, Euro USD was the latest one. Look at that. So we've had a call on the Euro USD. Right, something is about to happen with the Euro USD. So let's quickly get over to our trading view, and we look for Euro USD. There it is. Click on that. Right, let's remove my drawing tools. Right, okie dokie. Something's going to happen, right? Now, we don't want to take any notice of what's about to happen as regards to what the vibrator is telling us. It's going to sound really strange, but you have to kind of just go, right, okay, I don't care if they're telling me to buy or to sell. It's just the fact that there's a volume burst and we need to go and look at it with our ninjas, our ninja stuff. Right. So, right, three things we need to look at. One, PSARs. Are they on the top or are they on the bottom? Right, they're on the bottom. So at the moment, this is quite happily going up, right? They're underneath, supporting this so it can go up. Right, so at the moment, we're like, oh, okay, they're quite far away. Quite far away. Oh, hang on a minute. Look, something's happening. Right. So let's look at our stochastic, shall we? Now, as you remember, we want this in the extreme. We want it's got to be above this purple zone or below the purple zone. And look, it did go in the extreme. It did go above the purple zone. Now, before it went to the purple zone, look, the blue line was on top of the red line. The buyers were in control of this. But look what's happened. The sellers are coming back. They're going, no, we're not having that. We want to take control. They're crossed to stochastic. Look, they're crossing, which means that the sellers are about to take control of this trade. They're about to pull this sucker down, right? So what we need to do next is we need to look at our Heikin-Ashi candles. Now, for us to be confident about getting into a sell trade on this Heikin-Ashi candle needs to be a sell candle, a red candle, a bear candle, right? And look, it's starting to. Now, the one thing about these candles is, remember, we don't like wicks, right? We do not like wicks. Now, if you look at this red candle that's forming now, if you see the top of that candle, there is no wick on top of that candle. This is good. This is a really good candle. Now, if it's flat on the top, as you can see, it's flat. There's no wicky wick coming out of that. It's flat. What that means is it is pushing down. There's no wick in the way. It's pushing it down, right? Because it's flat topped, it's pushing, which is a really, really good candle. Now, for us to get into this with the BYOB, it needs to flip that SAR. Look, that SAR is still under there telling us that this is going up. We need that SAR to flip above that. If that SAR flipped above, and if that candle was a red sell candle with no wicks coming out the top, and that stochastic was in the extreme and the reds have crossed over and the sellers are now in control, we would get into that trade. But it's not ready, right? It's not ready. So we would wait for that SAR to flip above, and then we would have our three confirmations. We would have a SAR flip, a stochastic in the extreme, and a flat topped candle. They are three things that we need to look for on this BYOB strategy. That's all we need to know. And then we would get into that trade. So it's not ready, right? So I wouldn't take that trade, but we do have a way for this tool, this trading view tool, to give us a little nudge to say, oh, it's ready, but I'm not going to go into that today because that's a little bit more, it's a little bonus to keep you coming back for more, which I'll tell you all about, right? But say we was going to enter this trade, right? Say that all those three things lined up. Let's just say the stochastic was good, the SARs were good, the candle was good, we want to take that trade. Right, you would go, let me stop share. You would go to your, can you see me all right, guys? Speak of you, right. You would go to your MetaTrader 4. Right, you would find the Euro USD on your thing here. Right, so scroll down, find Euro USD. Right, I found Euro USD on here. Right, so I want to trade it. Let's just say, right, I'm not trading it. Don't take this trade, please. It's not ready. Let's just say that all of those things lined up, right? They haven't, so don't take this trade. But if they were all lined up and you thought, hang on a minute, all my 3 things have just gone ding, 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 this is good. You go into your MetaTrader 4 and you click trade, right? Don't look at my balance. Don't look at my balance, right? And then what you do is you go and you would place a trade. Hang on, let me just find that again. What was it? Euro USD. Euro USD trade. Right, okay. You press trade and you get this come up, right? This is where you decide whether you are going to just sell it, buy it, or you do different order types. Now, I'm not going to go into order types now. That's something you can learn in your IM Center, right? But we just want to go for kind of sell or buy. So you would set this to something called market execution, which means you're executing it right now. It's going in right now, right? We're not messing about. We're executing this trade. Then you can get the option to change the amount of your lot size here by literally just clicking up and down here. And then you just click sell or you click buy. And then it gives you the option to put in your stop loss, your take profit levels, that sort of thing. So let me just share again. Share. Right. So if this candle, I really want to find, I wanted to find one so we can take it. Right, hang on a minute. Let me just see. Right. I can't tell you how to take this because it's not ready and I don't want to give you false. Right, so it's just gone ching ching, so let's just go and have another look, shall we? Right, we've had a ching ching. Did you hear that noise, everyone? That ching ching. That means go and look at the vibrator. Sorry, the web analyzer, because something's just happened. Right, we've just had a call on the Euro, USD, JPY, the US dollar and the Japanese yen. Oh, look at that. That's an extreme. Look at that. Right, let's look at this one. Quick. Right, what was that? Game US dollar, JPY. Click on that. Right, okay, let's see what's going on here. Remove drawings. Right, so we need to go over our 3 things, don't we, to see if this is ready. That was on a 5-minute chart though, wasn't it? Ooh. So as you can see, we'll go back. See, that's called on a 5-minute, so that's telling you that it's 5 minutes, right? A 5 minute, you've got to be quick for that one, right? So let's go back to look on the 5 minutes. You can change this. See up here, 1 minute, 5 minute, 15. You can look at any chart, 5 minutes. Right, on the 5-minute chart, is the stochastic in the extreme? Thank you. I got a thumbs up. That's good. Right, so it's just, yes, it is in the extreme, right? This is good. So this is the first indication for our BYOB. This trade is in the extreme, right? Has the parabolic SAR flipped underneath?
No.
Oh, no, it has not. It has not. It's not ready yet, right? Have we got a flat bottom candle? No, not ready.
Behind you.
Behind you. It's not ready yet, okay? You need to make sure that all 3 things line up, right? There is actually, hang on a minute. Do you know what? It's something I missed out. Something very important I missed out, which I should not miss out because I'm going to be in big trouble. Right. As we all know, the world is a bit mental at the moment, and that is called news, right? Everybody aware of news in the world, right? And do you think the news actually affects the markets? Yes, big time. So we need to be aware of the news, okay? Now, we recommend you go to something called, before you start trading for the day, forexfactory.com. Write this down. Not seeing anyone writing down. Write down Forex Factory, thank you, Paul. forexfactory.com. Now, this is like your little news bulletin for the day, things that would affect the Forex markets. And you need to be aware of this because you could have all three things lined up on your BYOB strategy. You could think that this was like the most awesome trade about to happen in the world. But if you haven't checked the news, Boris, old Bojo, could say something in 5 minutes and everything could go completely the other way because, you know, it's unpredicted. Or bloody Trump could go off, right, and say something and something could go like horribly wrong. So we need to check this, right? You go to forexfactory.com and look, you go to calendar, you make sure it's set to your time. So at the moment, this is saying 2 p.m, so that's not right. So if you click on the timestamp up there, you can change this to your time. So if you live in Casablanca, which I know most of you do, or London, which apparently, so we're the same as Casablanca then. Okay, let's say we've learned today. Right, you save your settings, right? So it's now syncing my time, 3:54 to the actual time of what's going on, and go to calendar. Right, as you can see, pairs are listed down the side. Right, go to the right day for a start, which would help, wouldn't it? Thursday, March 26th. This is things that you need to be aware of that are happening today that could affect the Forex markets. It could affect the trade that you take. It could affect the pair that you are looking at. So you need to be aware of this. Right, as you will see, the pairs are down the side here. And you've got these little folders, see? Now, so, oh, my tea's gone cold. Where's the kids when you need them? I need a cup of tea. Goodness me. I need to have a flask ready, I think, for this. Right. So, don't giggle, you put me off. Right, I've got annoying kids now. Right, the film must have finished, or they've got bored with it. Right. So, we have got flags now. Yellow flags means meh, like meh, it's all right, not much going to happen. It's a little bit of news, but won't really affect anything. It's like you don't really need to worry. If there's a lot of yellow flags in one particular area, there's 3 yellow flags kind of, yeah, we'll be aware of it, but it shouldn't cause too much problem because they're yellow. They're not what they call important news. Orange flags could affect the way that the trade works, okay? So be aware of them. Don't trade. They even give you the time that this orange flag's coming out. So at 7 a.m. this morning, something in retail sales was happening with the Great British Pound, which could affect the way that it moved, okay? So just trade with extra caution around that time. They normally say an hour before or an hour after news. Just be careful. Right, it's red flags that you want to be aware of. It's red flags that will affect the way that those candles move, okay? You could be the best trader in the world, but if you haven't checked the news and you wasn't aware of it, you could have everything set up, everything lined up to do what you think it's going to do. A red flag news could hit and literally you could go off completely the wrong way, right? So you need to be aware of these. So here, as you can see, at 11:06 a.m, we had a red flag on the US dollar. So I would say I wouldn't try to trade, especially if you're scalping, the US dollar an hour before or an hour after 11 o'clock. And then at 12 o'clock lunchtime today, look, we had 3 red Great British Pound flags and 2 yellow. So Great British Pound around lunchtime was really not a good one to be trading. It could really send your trade the wrong way. And then at 12:30 today, we have red flag for the USD, but not only red flag, but orange and yellows as well, all the way down to 2:30. So this afternoon, US dollar, be a little bit careful. And what you can do is literally come in before you start trading, just jot down things you need to be aware of and what times you need to be aware of them, okay? Because they will affect things. Suddenly you'll be in a trade, you think, oh yeah, but this, you know, there's nothing, it looks really good. It's got the 3 things all met. And then suddenly it could go the wrong way. And you'd be like, well, what happened? And then you could look at the news and go, ah, okay, that could be why. And look, today, all day today, the G20 meetings are going on. And that could affect all of the pairs today. So when there is news going on like that, please just trade with extra caution. Make sure you've got stop losses in so that, you know, if your trade goes the wrong way to what you think it's going to go, you know, you put a limit of how much you're prepared to lose on that trade, okay? And that's all stuff we teach you how to do. So tomorrow, we can look at tomorrow. Tomorrow's a nice quiet day for a Friday. That's not bad. Look, all yellow, nothing major. So tomorrow you should be good to go for some really good trading. Okay, so let's have another look at this, shall we? Let me drink some more cold tea. Right, so this US dollar is still not ready. Look, we do have stochastic in the extreme, which is excellent, but we haven't had a PSAR flip and we haven't got any flat bottom candles. So this one's not ready. So let's go and have a look at another one. What else has happened since we've been talking? Right, still the same one, EuroCAD. Did we look at EuroCAD? This is telling me EuroCAD's had a little volume burst. Oh, look, had a little spiky spike. So let's look at EuroCAD. You can go down here and find the EuroCAD. Oh, look at that. That's a nasty little wicky wick. Look. But, right. Is the stochastic in the extreme for a buy? No. Look, it's down, but it's not in the extreme. It's just not. It's just not ready. We've had a PSAR flip, which people were going, oh, yeah, we've had a PSAR flip, which is good because that means that, you know, it's flipped. We've got a lovely flat bottom candle. Look, there's no wicks coming out the bottom of that candle. So that wants to push up. It's got no wicks to stab in your hand. It's just going to push because it's nice and flat. But stochastic wasn't in the extreme, so I wouldn't take that. I wouldn't take that. So let's ignore that one as well. So we're going to have a look at that one. So what else we've got? Great British Pound, US dollar. Right. Ooh, ooh. Great British Pound. Look for that one. They're alphabetical. You still think I can find them still? No. Right. Okay. Right. Great British Pound. Oh, this one's been a sod today, right? I was in this one earlier and it just keeps going up and up and up and I wanted it to go down, which is not good. But that was on a different sort of trade. Right. Now, on the 5 minute, I like to go on the 15 minute for BYOB. I just find you get a little bit more time to look at it properly. Okay, so let's look at our 3 rules for this one. Is the stochastic in the extreme? Hey, we've got extreme stochastics going on, which is good. But look, the blue line is on top of the red line. The buyers are still well in control of this. Right, they're not letting it go yet. They're not ready to give this one up yet. So the PSARs are underneath. It is a strong uptrend. Look, this thing is not coming down anytime soon. It's strong. They've got nice flat bottoms. Look at that. No, we're not touching that one, guys. Don't even look at that one. And also with the Great British Pound, it's been volatile for a long time, but it's one of those pairs that it moves very fast. The Great British Pound, US dollar moves fast. So be careful with that one. Let's have another look at the Euro Ord. Yes, you can. Sorry. Right, Euro Ord. Oh, let's have this one. Euro Ord. Right, we've had a volume burst on the vibrator web analyzer. Okay, this one's a bit messy, isn't it? Right, is the stochastic in the extreme? No, not really. It's been in the extreme, which is a good thing, but it's kind of the PSAR's flipped. It wasn't the extreme down there. We had a flat bottom there, but that's really wicky before it. Look, it's a wicky. We don't like wickies. It's a little bit indecisive. Look at all these wicks. It's a little bit, so we don't like that one either. So I might not be able to find you a nice little trade today. So what time is it? 4 o'clock. 4 o'clock. Are we getting any more of these coming in? Oh, we got, oh no, USD Chef. Right, okay. Let's have a look at that one, shall we? Now, USD Chef is a lovely little pair, but I hate it. I've got this thing about you, Chef, and it just seems to never go the way I want it to go. You will learn this as you get more experience in trading. You'll sort of have a love-hate relationship with certain pairs because you've had experiences with them in the past. And I know this is Paul's favourite, but I hate it. Right, okay. We'll have a look at it anyway because it can still give you nice lots of pips. Right, you Chef. Right, USD Chef. Now, does anyone know what Chef means? It's the Swiss franc, and they call it Chef for some reason. Right, okay, let's look at this one. USD chef. Is the stochastic in the extreme? Yes, we have extreme stocks, extreme stochastics, which is good. Now, the sellers were in control of this. Look, see that red line is on top of the blue line. They were in control and they took this right down, which they're doing right now. Look, this is a strong down at the moment. But look, if you look at the stochastic at the bottom there, you'll see that the blue line is crossed the red line. The buyers are trying to take this back. They're trying to take control back of this trade. They've crossed over, but if you can see, they are kind of running parallel now. They are fighting each other, which means that could go on like that for quite a while. The SARs are nowhere near flipping underneath. Look, they're right up here. They're not ready to flip, and this is not a flat bottom. So this is not ready to get into yet. I wouldn't get into that one at all. So I don't think I'm going to find you anything at the moment. This is the new, let's just look on this one. This is the vibrato. This is the new version of the vibrato, which is all very bright and sparkly and lovely. And it does exactly the same thing as what the other one does. It just looks different. Okay, so it depends. You can use either one. It doesn't matter. But look, it's the same pairs still. It's no different. But you can change this to 5 minute, your 15 minute, your hour, your 4 hour. So you get calls on all different sorts of time frames. But I just have it set to the 5 and the 15. Right. Hopefully, I've given you a good understanding of the BYOB. Right. So basically, we have got 3 things we look out for on the BYOB, haven't we? We have got the stochastic, we've got the PSARs, and we've got the flat top Heikin-Ashi or the flat bottom Heikin-Ashi candles. And those are the 3 things we're looking at on our BYOB strategy. And it's a brilliant scalping strategy. So we also need to check the news, which I've told you about. Now, I'm not going to go into any more details with that at the moment because I don't want to blow anybody's mind, right? But if you at home can look at a stochastic and decide whether it's in the extreme or not, if you can look at a dot and decide whether it's on top or below or not, and if you can look at a candle and decide if it's got a flat top or a flat bottom, you can trade Forex. You can come into the Forex markets and you can place trades. And it really is as simple as that. You do not need to overcomplicate Forex. It can really be as simple as that. And it just takes a little bit of patience. Patience is what's going to make you rich at the end of the day. You can't just jump into something because you want to take a trade. It's almost like, you know, you've got this itch and you need to scratch it. And you're like, oh, let me just take anything. Oh, it's not met all the 3 criteria, but I'm going to take it anyway, just in case. That is gambling. We don't gamble. We make sure that all 3 things are set up. The news is in the right place where we want it to be. We use the right lot size for our account sizes, and we go for a sensible amount of pips, okay? And we compound that money. That is what makes you a very successful Forex trader. So hopefully you've got some value out of that. I know that it's really basic, and I know that I'm going to just stick to basics, but I think sometimes you really do need to strip everything back and just look at, you know, what it all is and how you can do it. And if you think you can follow those 3 rules by looking at that chart, then you can trade Forex. There's no reason why you can't start with that, work on that, build that up, get your confidence, do all of that stuff, and then you can start looking at more technical stuff. If you want to home in your entries a little bit more, if you want to look at the overall bigger picture, if you want to start adding different sorts of indicators, there are trainings for all of that stuff. We have billion-dollar traders within IM Academy that can teach you how to do all that advanced stuff if you want to take it further. But when you first start, you need to strip it down. You need to keep it as simple as you possibly can. Okay, and we try to do that on our live tradings. We try to just literally strip it down, show you how we do it, show you how simple it can possibly be, and hopefully, you know, you can build. You just have to keep practicing. The only way you can really learn is just to keep taking trades. You can't just sit there and watch loads and loads of stuff and not actually physically trade. You need to get your demo account, you need to get your phones, you need to look at those 3 rules, you need to press buy and you need to press sell on a demo account. Get used to the buttons, get used to what you need to press, get used to different lot sizes and things like that, so you can understand what's going on. So I've got a big chat box around here and I've not looked at any of it. I'm so sorry. Right, let me just see if there's anything in here that I need. Oh my God, there's loads. Right. Oh, thank you, thank you, thank you, thank you. Oh no, I'm not recording, Kevin. No. I'm just speed reading. Ah, yes, okay, Patrick. The ball has its horns and pushes up into the air. So that's another good way to remember your balls or your bear candles. Excellent. Thank you, Tony, for dropping some links in there for the Forex calendars and things. That's brilliant. Oh, Casablanca's in Morocco. Well, this isn't geography, so I didn't know that. But thank you. There you go. You've learned something else as well on here. That was fantastic. Okay, thank you, Stanley. I hope you had a lovely birthday the other day as well. We didn't get any cake, though. You could have bought some cake for the tea, but no, he's eating the bloody lot, isn't he? Right, okay. Excellent. Thank you for the comments, everybody. Right, okay. So is there anything else I need to tell you about? I don't think so for now. I think that will do you for now. Just go practice this stuff, okay? Just go look at the charts, practice these 3 rules, and then maybe in the next session I will teach you some more little bits and pieces, and we'll kind of progress very slowly together. But I still want to keep going over these basics for you all the time, so that anybody new can come in and just figure out if they think that they can do this. I mean, if I can do this, anyone can, because I've got no mathematical brain whatsoever. But there you go. So thank you, everybody, and happy trading. Be careful of the news. You're very welcome. And yes, hopefully, I plan to do this. I'm not doing them on a Friday because Friday's not a very good day for trading, and I probably won't do them on a Monday because Mondays are not very good for trading because the market's waking up. But hopefully Tuesday, Wednesdays, and Thursdays every week. Hopefully, I can jump on about 3 and do this. But obviously, I'm only doing this because the kids are off and I don't have to do a school run. So when the kids go back, I might have to change my time and do it when they've gone to school or something like that. But hopefully, you know, if there's a need for it and a call for it, then I'll carry on doing them. So thank you, everyone, for jumping on. I really appreciate it, and appreciate your support for everyone that jumped on as well, that already knows all this stuff, but they stuck with me anyway. So thank you.
Thank you,
happy
Sarah.
trading, everybody.
Thank you.
Thanks a lot.
Brilliant.